All news is good news. The Dow Jones soars all by itself. And the mighty Kong meets Godzilla. More about all that when we start the show.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market was widely mixed this week, with high caps gaining a lot of ground and the small and mid caps moving to the downside. The broad market really did just chop sideways here, but each time we had a dip, buyers stepped back in, and earnings did help as we got some decent earnings from some of the high caps and techs, especially like we saw out of Apple. The news, well, it still means nothing, apparently. President grudgingly signed the bill that sanctioned Russia. A lot of negative news coming out of Russia on that, and Russia tosses out 755 mission workers. So it's kind of a tit for tat going on there. And the president did say that relations with Russia are now the worst ever. China warns about the trade war that apparently is starting to heat up as we've taken a big step backwards as far as trade goes. And Special Counselor Mueller, he impanels a grand jury regarding the Russian probe. That has POTUS pretty upset too. And when that news came out, the stock market fell a whole 5 points for about 5 seconds, and then the S&Ps rebounded really quickly. Payroll numbers, they came out a lot stronger than expected, and there was some sign of wage inflation in there, so the bond market didn't like that. Bonds ticked down pretty good, about a point on the news, and the dollar finally got an uptick. We thought it was going to tick up late in the week, we said, and sure enough, it did come with a surge here on Friday. We're hearing more and more people using the word super cycle out there. What exactly does super cycle mean? It seems like what they're saying is that, you know, when it comes to the stock market, the super cycle means that, well, they just only go up and you never have to sell anything. So we're seeing quite a bit of that. In fact, the Dow Jones Industrial Average now here on Friday, as we're approaching the last couple hours of the day, up again, nearing 50 points to the upside. Now, this is the 9th consecutive up day for the Dow Jones Industrial Average, as they are definitely buying the high cap stocks. Dow passes over 22,000 easily and is up over 1% on the week. The S&P 500 and the NASDAQ really little changed on the week, as they have just pretty much chopped around in here. And the small cap Russell moves to the downside about some 1.5% or so. And it's as if the investors are sneaking out of the riskiest things out there in the stock market. The bond market, just a small up week right now. It reversed Thursday's big up day that they had there, as the Bank of England held interest rates, surprisingly remaining extraordinarily dovish. You know that the whole Eurozone area is at an 8-year low on their employment or unemployment. So you got to think at some point they're going to start to do something, especially with the ECB sitting at still negative interest rates. There's something crazy about that, right? Well, Friday saw that payroll number came out and the bond reversed that and moved to the downside. And like I said, just a tiny up week for the bond market. Dollar's got a good up week going as it finally gets this big boost here on Friday, being attracted by the pop in interest rates here in the U.S. and the hope that this dollar rally is now got some energy to it and will remain. So that has this dollar bounce that should be lasting, I think, for, well, we have it targeted at about 4 or 5 weeks for a stronger dollar. Gold moves opposite, and it did so. It moved down about 13 points on the week. Silver, a really bad week, about 55 cents. And all, of course, related to the strength in the dollar. And light crude, well, a small down week in there, really a very tight range as investors are confused and trying to figure out what's going on with the producing nations and OPEC as they just simply cannot get anything going, as every time you turn around somebody's picking up production. That's after Saudi Arabia said that they were cutting production by 1 million barrels a day. Well, that's easily offset, it appears. And so the light crude market is having a tough time making any ground in here. A really, really tight range and a small week. So a little change of pace right now. That piece that I did about Kong meeting Godzilla, I've got some stuff to say about that in here, and I think this is going to be interesting. You know, a funny thing happened on the way to the Amazon monster killing retail. And that's Godzilla entering the scene, Godzilla being Walmart, while Amazon has, you know, crept its way up to 1,000 and over and then started to falter in here. Walmart's been really boning up, the stock looking strong, and they've been buying companies that can really help them compete. They bought Bonobos and ModCloth and Jet.com and are adding a lot of distribution centers. This is all about going after Amazon. Well, Walmart's not going to stand by and let themselves get killed. As a matter of fact, the numbers, if you compare, if you look at Q1 growth numbers, I don't have all the Q2 numbers, but Amazon's online growth was 63%. It was just, I'm sorry, that was Walmart's online growth. Walmart, 63%, while Amazon has been growing at about 24-something%. So Walmart's e-commerce growth, 2.5 times the rate of Amazon, and they are running them down, and I think before you know it, this is going to be a huge story. So I want to make sure that huge stories, you hear from me first and find some trading opportunities in there. Let's take a look here as we look at the Walmart charts, and then we're going to compare that to the Amazon charts, and you're going to see what I'm talking about here. Here is the Walmart chart right there, and this is my special look at what charts look like, where you look at the left side is the weekly chart and the right side is the daily chart. We're going to blow up the weekly chart for you to look at, and here's what I want you to see. This is a tremendously bullish pattern that we see in here. So I'm a cycle analyst, and I look for the rhythmic motions in the market that you could see right in here, as these rises and declines are pretty clear that you can see right in there. You see that? And now we had this rising period in here. So each time you get a rising period, well, usually they go pretty strong, and when they fail, they fall for a long period of time. So you could see what happened in there. Well, we've been going up in here now for the last month plus. We get up into some pretty good target zones, and this stock looks strong and continues to. Now, I want you to note something, that Walmart, which is, you know, a huge company, fantastic, they have a market cap of $2.42 billion, and they have a PE that's somewhat elevated for Walmart at about 18. Now, keep that in mind, because we're going to switch over in a moment to the Amazon chart. Here's Walmart. You could see this is our momentum chart on the daily chart. You could see momentum turning positive in here and being positive, pulling back a little bit, but this is a key number when it got above that level. That what that says to us is that passed a very important cyclical resistance and peak, and that it is set up and suggesting that a major advance is underway. So that's a look at Walmart right there. Now we're going to switch over to Amazon right here. Now Amazon has a lot of drawings in here. This had the colored phasing in there. Now remember what I said to you about the market cap and PE in Walmart? Here's the market cap and PE in Amazon. Market cap like double. PE 10 times, in other words 18 in Walmart and 185 in Amazon, and they are struggling with costs going up. That's why the stock got hit. So this stock is actually rolling over here. It gets over 1,000, dips to 986, and I did a special piece yesterday talking about the short-term pattern in here for my members, and this is a really negative pattern. Here's that earnings miss, and because costs rising, the big downside gap in there, and now it's starting to slide under an important area, and this looks really ugly to me. So we have, in my opinion, Amazon just absolutely way priced high in here relative to Walmart, which is chasing it down, and this big battle, which is in the early stages, I think is going to come in a big way. So you can see in there just very different technical patterns in there that really favor Walmart, and Amazon really looking to me like it's rolling over and is going to have a lot of trouble moving forward. As far as Amazon, I think, well, not good for it at all, and I would call Amazon done. What do you think about that? Amazon's done. I don't think it's going to be able to get above the recent highs or hold above there at all, and it's really got a negative pattern. Walmart, well, it's better, a lot better, and all of this is really bad for the rest of retail, because these two fighting it out with cost cutting and great distribution channels, great for them and bad for everybody else. And also, you think about that, NASDAQ is one of the 5 horsemen, right? In the FANG stocks. Well, Amazon may be the first of the 5 to fall in here, and Netflix not looking so good either, if you ask me. So I think it's bad for the NASDAQ, bad for the market leaders, and probably not all that good for the market as a whole. So I just wanted to show you the two monsters fighting it out in here, and that's overall probably great for the consumer, for you and I, but not so good for the markets, and certainly not so good for retail. I want to bring that, I thought, really interesting piece to you. So now what we're going to do, as we always do, we're going to look at our 16-minute chart of the S&P 500, the ES, so that we can get a sense for what happened in the trading during the week. So here is that chart of the S&P 500, and bring that up for you right there. So what we have in here is the gray area, which is the overnight trading, and the white area is the pit trading, or the regular day trading, and all of the news that did move markets. And talk about moving markets, well, nothing, right? Look at what happened in here. I mean, just this range that you see in here as the broad market chopped. We were looking for this to be a steeper decline in here, and actually getting down to some 24.49 was our target, and that didn't hit it, as these high cap stocks have such powerful bids in there. Monday, news came out that North Korea fired another ICBM, and that was Russian sanctions. The news about that all coming out. The Eurozone unemployment rate at an 8-year low. How about the junk bond rate in Europe? It's at just near a record low. Who could, 2.4% on junk bonds in Europe? I mean, there's something crazy going on when you talk about that. Boeing jumped like crazy on likelihood of big orders from out of India, and the industrials, they surged, the NASDAQ dropped, and you could see the choppy market that we had in here on Monday. World markets were all stronger on Tuesday. You got this pretty good overnight rally, and the president tweeted and took credit for the record Dow, like he's been around here long enough to do that. Well, truth is that investors are looking at his agenda and saying, well, you know, you cut taxes in a big way and you stimulate the markets, then it's good news. So they're buying on that. They better get that, though, or they're going to be quite disappointed. They were watching Apple, which the news was coming out after the close, and Apple earnings were really good, and that was a quiet day here on Tuesday. We got those Apple news coming out, and on Wednesday morning, look at this, the market opens higher and cannot hold, and you get this really big move to the downside right there as you fall from 24.76 all the way down to 24.63. It's a whole 13-point decline in the S&P 500, which is nothing. And you look at this chart, it looks like something, but the market is having a hard time getting anything down. POTUS was aimed at China, talked about the unfair trade going on, and that's going to heat up some more and more in here. And the Eurozone talked about their fears of the strong euro, weak dollar, which then changed as far as Friday came. But look what happened in here. You get all this selling in here, and as typical, you get the buying pushing it back up for the rest of the day as the buyers are not done in yet. Thursday, world markets were really mixed. The Eurozone was up when the Bank of England held rates. That pushed the bond markets up. The pound had a big decline after that. We were looking for the pound to roll over, and that fit nicely into our analysis. Russia then comes out and warns about a trade war. I'm telling you, you're not done hearing about that. Tesla goes up after a huge loss. They beat estimates, which expected even a bigger loss. And Elon Musk comes out, talks about being depressed. And there were been so far 63,000 Model 3 cancellations. What do you think about that? So their cash burn is huge, and Tesla, I think, I'm going to talk about that later in the show. I think it's a sell. What do you think of that? And ISM fell sharply, and that helped the bonds. They got that huge pop along with what the Bank of England did, and then reversed on Friday. U.S. stocks were really quietly lower. Here's where Mueller comes out and he impanels the grand jury, and you got this little downtick of 5 points for a few minutes, and then, of course, it bounced right back. World markets were up with the Eurozone up a bit as far as Friday goes. The payroll numbers came out strong. You could see that up 209,000 and 4.3% equals the 16-year low on the unemployment rate. Wages popped about 0.3%, and they're up 2.5% year over year. That is the beginning of some wage inflation potentially. That's why the bond market moved down. Also, Greenspan was interviewed on CNBC, and he's talked about the bonds having their irrational exuberance moment. He's very negative, very worried about the bond market in here. And U.S. stocks just simply are with about an hour and something to go in here in the day, are chopping around in this tight range. You can see that little triangle formation there. Not a whole lot when you look at that. So that's a look at what happened during the week. Lots of news that went nowhere. Interesting, right? And again, the Dow just soaring all week long. Here's our calendar for the week, and man, there's almost nothing on here as we've gotten past the earnings season. The only thing that I have marked off in here is the on Friday, the consumer price index. Now, why would I be that interested in the consumer price index as a market mover? Well, it's because if we start seeing some inflation heating up, the bond market's going to really take it on the downside. And honestly, I don't think the stock market could survive big jumps in interest rates in here. So I think that is really an important number to consider. So that is a look at the calendar for the week, and that's our opening segment, and we're going to come back and we're going to look at our best and worst stocks for the week. All right, we're going to look at the best stocks for the week. I do this every single week. Let me get my chart set up so that we can look at this. Remember, when I do my analysis, I do my analysis on the cycle analysis. Essentially, for those of you that are new viewers, I look at the stocks that are in cyclical rhythm patterns. In other words, what I'm looking at is the stocks that are moving in strong patterns that are in rising patterns. That I would call that bullish phases, and also stocks that are in patterns that are in declining patterns, and we call those negative phases. And what cycle analysis is, and I'm still trying to find my cycle analysis chart to share with you all. What cycle analysis is the look at the rhythmic movements in the market. The rhythmic movements of the market are essentially money flow in the market, and money flow is, there are many indicators that you could look at for the purposes of seeing money flow, and there are my indicators are looking at the cyclic actions in the market. In other words, the rhythmic motions. And the way cycle analysis works is that we look at measuring it from low to low, and then that distance between important lows in the market is then those patterns continue essentially as we find that those equal distances between lows continue. They go, you can actually in many stocks find that going way back, and in you can look at it in terms of monthly charts or in terms of weekly charts or daily charts. These patterns all continue to show, and those patterns are what I put on my charts every single week. So I want you to be real familiar with that, and we're also working on a cycle workshop that I'm going to be teaching how to do this cycle analysis, and I'm about 2/3 of the way through writing it, and then I have to record it. So if you're interested in that cycle workshop, we have a list on our site that you can check off that says that you're interested. It's in the bottom of the front page, and just say that you'd be interested in that cycle workshop when it's available. So let's take a look here as we look at our best and worst stocks for the week. We'll start out with the best at Yelp. And here is a huge upside pattern. This is really going to give you a feel for what I'm talking about when I say cycle analysis and repeating rhythmic patterns. So what you have on the bottom is my what we call the cycle bracket, and this is essentially measures the ideal cycles. And what we look for is key repeating low times. Like you can see the low right in here and a low right in here. Interesting, this was a diamond formation that you saw shape up in there. And then this was a very bullish low. We call this a right-hand translation, where there's almost no decline during that period. Now note how sharp the decline was in this declining period, how sharp it was in this declining period. Well, this one was so super bullish it couldn't give you anything, and then it pushed on the upside as the momentum or directional component was super strong. Well, okay, that's the whole basic small lesson in here, but let's talk about Yelp. And Yelp is a stock that I really hated. I mean, it was really in bad shape and made a double top and was moving down and continued to move down through that negative period that we were looking at in there, but then it turned up right in here. So you could see the channels in here that made the upside, and then as it rolled over and then started to move down in this negative period. But look at this rising period, how strong it is. The likelihood is that somewhere in here it's going to peak and then start to roll over, but then establish an upward trend. And you could see how that's projected up over here. So while I wouldn't really chase Yelp right here, they had big earnings. They people are excited about a deal that they made with Grubhub, and up 20% on the week is the best of all of the stocks we look at. GoPro, GPRO, is the next one in the best of the week, as this stock gets a big pop right over here. You could see that. Let's go out a little bit further so you could see these cycle rhythms in there, and you could see the cycles marked off. And now early, it makes a little early bottom in here and explodes up. We expect it to be able to get up near this $11 area there. You could see our projection in GoPro. So they had a smaller loss, up 16% on the week. In the home builder category, Beazer, BZH, this stock had a good up week in here too. Note the uptrend and the perfect cyclicality here in Beazer. As you can see, the repeating lows. Now, look at this is a low period right here. See the bottom of the trough, and see the bottom here and the bottom here, right? And then the bottom here, and notice how bullish that was. And each one of these has a higher peak and a higher low. Well, this didn't quite get to the higher peak, but it had a much higher bottom and then explodes up. Here's the fib target zone between 1610 and about 1710. So that's where we think it's going to go up into in there. And this is only the first or second week up. So that's a really bullish pattern in Beazer Home. TTWO, the next one, 10% gain on the week. Now, again, you could see the positive cyclicality in here, and look at the 13-week moving average. As well, it was 34-week moving average giving it strength right in there. The low due here, it moves up. The low due right over here, it moves up. And look what it did. It exploded up here late in the cycle. There's only about 2 or 3 weeks to go. We're looking for a modest pullback right in here and then up again. 13-week moving average giving it solid support right there. It's really overbought on a longer term basis. In other words, the distance between the price here and these moving averages is excessive. So we think it's going to have some, pullback like a stretched rubber band. And then after that, it's probably a buy and move up again. Earnings big beat. Analysts upgrade their targets, and they loved it. One of the stocks that I thought was in a lot of trouble this year was Domino's. Domino's up 7% on the week, and I just think this was a big bounce in Domino's stock, and it's moved up into what we think is our sell zone in Domino's. I'm going to show you that. That's DPZ. It's been just over the years just a monster stock in here, and you could see our cycle analysis in here also as I put the chart up. And this one has had the highest PEs of the whole group. Cheesecake Factory, the PEs coming in because they are really struggling to get their earnings in gear. So I'll show you a little bit about that later on. Take a look here at what I think is an important break. Now, this break right over here, the significance of that break is that, well, you look at it, it's big. But it gave up almost all of this rally off of this cycle low. So you see the low here and the low here. Look at the beautiful cyclicality. Don't you love when I do that? So this is the rhythmic upward motion. You could see it getting support near that moving average right up there, the uptrend. But now you can see the big bounce right there. Well, that low was due right here. You could see that. So there's your bounce. But it gave up so much ground that in this previous decline that we think it's going to roll over and fail, and that this is actually a major top in Domino's. Take a look here. You can see I have my Fibonacci still in there. Let me remove that. And what we have here is what we believe to be coming up to the short-term resistance and sell zone in Domino's Pizza. So here's the rally going up and looking to us like it's getting ready to top. 89-day moving average right there. 202 is about maybe the price where the real sell zone starts. It got up as high today as about 200.85, and we think that it is a sell and going to go a lot lower. Now, it could, just because this is really on the left side here, the first week that it bounced up, it could could play around in here for a few weeks, but we think Domino's Pizza is in a lot of trouble. RIG, that is Transocean, this one has a big upside move. Now you'll note there's a dotted line right there. That's the driller group right there. And then this purple, light purple line there is the cycle for Transocean. The low due approximately here, it made an early bottom and then ticked up into this resistance zone. It's been under a ton of pressure. Oil improving. The rig counts are not really going up yet. So this is the beginning of something potentially. It bottomed at the right point. It's up 5% on the week, and its earnings were better. So we think that that stock and some of the other drillers are in a place where they're going to start making some important bottoms and maybe be in better shape a little bit later on. So trying to work those bottoms now. So we're going to look at that was the rig pattern, by the way, and now take a look as we switch over and look at Apple. Apple was a 4% gainer on the week, a little bit more than that. Earnings a good size beat. Analysts upgrade the stock, they raise their targets in there, and Apple beat on all the metrics. And I actually think that they were not looking for a whole lot, the analysts, because everybody knows that, well, the next iPhone cycle is about to start pretty soon, and so people are holding back on their buying. So when they saw some good numbers, they loved it and lifted the Apple stock. We'll take a look here at Apple, AAPL. And here is that chart. Take a look, and you can see that it gets up to this area right here, and that is the 50% fib extension. It made another high right there this week. This is a spot where we expect it to have trouble. Now the resistance is between 158 and 162, and we wouldn't, you can see our forecast is that it's likely to roll over in this area. If we're right about what we said about Amazon, well, we think that there's going to be weight on the NASDAQ, and Apple probably will feel some of that. So Apple, you can see, gets up into that resistance zone. As far as cyclicality goes, we think it's going to play around a little bit more in here, and then sometime get into a correction further into October or November, based on that timing in Apple. And the last one on the gainers for the week on earnings, and they're almost all earnings, right? As we see that Tesla moves up today. It's having a good gain in here, and it's we think that this is a bear flag that's forming, and that cyclicality points to it declining also into the September time period. So we think this rally that it's in is going to fail, and that it will move down. They have huge cash needs. Like I said, they've had a lot of cancellations. And what if Elon Musk really does have depression issues? Well, he's the one that said it. I'm not making it up. So you could see we get into this sell zone or resistance zone right up over here. We were early in a rally phase, and that's this rally right in here. So that doesn't surprise us that we're getting an uptick after the earnings report, but we think this is a real trouble area for the stock, and wouldn't be surprised to see Tesla moving to the downside again. So that is a look at Tesla, and we will be right back with what are the worst stocks of the week. All right, for the worst stocks of the week, one of the stocks that we don't look at that often is the Israeli company Teva, which is in the generics category for drugs. And, well, there's that Tesla chart for you again. Let's just move this over to TEVA, and you can see a nightmare. That's the daily chart I'm showing you there. Look what happened in here. Their earnings had a big miss. They guided down, analysts all over this one, and they just talking about increased competition in generics. Mylan followed it, MYL down about 13% on the week for the same reason. Big collapse in there. Now look at the cyclicality in here. So, you know, I'm giving you cycle lessons in here, and one of the things is that when you get a big break, you could see like you have right over here, that's in the middle of the cycle and it gets below the previous cycle low, so you can see the low that was due there, right there, that says it's likely to decline all the way through this period, which goes into mid-September. So when you see a big break like this and you say, wow, this stock looks cheap, after all, it came from $70 all the way down here to $20, maybe I want to buy it. And when you look at that, it says to me, well, this stock has 2 more months of trouble ahead of it. So I don't think you buy it in here. I think it's a really bad pattern when you look at TEVA. Take a look at SPWR, Sun Power. Here's a stock that had a big break for the week. They're down 20%. Their earnings beat, but their sales forecast was really weak. And you can see in here now, again, we're talking about the end of the cyclical period that should make a bottom. And this is only 2-3 weeks away right in here. And you can see this mild upward trend. The green zone is positive, the yellow zone corrective. The red zone is negative. In other words, when it breaks under an important low and it breaks, you get negative. Breaks under an important low, you get it in a negative period. But this is just a corrective period in this upward trend. So that says to me that Sun Power probably is a buy right around the $8 number, something like that, in the next few weeks, and then it's likely to move up again. So I mean, their earnings weren't bad. It's just that, you know, they gave a soft forecast, which scared everybody in there. So that's a look at Sun Power. Next one we're going to look at is Triple D, DDD, which is down 17% on the week. Their outlook was really weak, and you could see in here, this is really pretty amazing. As you see that little tweezer top, the rejection at the fib extensions. So there's your fib extensions, like we talked about some other stocks being at. Here's your tweezer. That's those 2 tails right over there. And then it turns to the downside. Notice the Hull moving average right over here where it turned down after failing from that fib confluence, and then breaks down and even breaks way under this triangle. We were super bullish on Triple D right here and caught that move, and then it rolled over and we didn't like it, and you can see it moves down, and the low is due here in about 2 or 3 weeks. I would not buy a stock that looks like this. Certainly it looks like it's going to continue to the downside. Let me just show you the daily chart in here and the value of the importance of momentum. Now I preach momentum all the time, and here is where the slim ribbon, the momentum indicator on here, turns positive. And look at this. Here's where the slim ribbon right over here gets choppy. So it loses its upward momentum, gives you a little bullish signal right in here that fails, and then turns negative again. And then as these slim ribbons start to widen, it tells you the trouble. And look, as you see right in here, as momentum was really negative. So that's a look at Triple D, a stock that really got hit. And it's, I believe, you know, you need to wait a little time to buy this one. Next one we're going to look at is Dillard's, DDS, in the retail category. And here is that Dillard's chart. And take a look here. As you can see, the dark cloud cover this week. So a dark cloud cover, to form dark cloud covers, you have a up week or a white or green bar like that, and then you make a new high, and then you come halfway or more down through the bar, and that makes an important top. Now, if you go into my tools for techs in our library, you can see all of the teachings that I gave about candlesticks. It's really a great piece that talks about the psychology behind each of the candlesticks. Here is a morning star, a hammer bottom, and engulfing pattern. You can see how those all brought rallies. An engulfing pattern that failed, and then when it broke underneath the support, it made it really weak, and you have that dark cloud cover. So a lot of great candlestick patterns in here. This says to me that this stock, which got way past these cycle peak resistances, obviously made an important bottom, but we think it's going to have a lot of trouble moving forward in here. They were talking about capitalizing on their real estate values, and then they gave you that huge up move from 55 up to 80, Well, that's some craziness in this retail environment. And so that's just way out of line. And the talk is dying down about how they're going to capitalize on real estate. So forget about it. I just think that Dillard's, any uptick it has in here is a sale in there. A few more bad stocks to look at in here. Fluor is one of them. Now, it's interesting that, Fluor is in the heavy machinery, mining machinery, that kind of business. And it's the same business as Caterpillar, which is going through the roof, basically been super strong. But Fluor down for the week 10%, and that is a bad pattern in there. As it's been bad and worse, you got to really wonder if Caterpillar is going to top in here and all of a sudden take a header, because look at this stock. This is stock trades in March at 58 and declines all the way to 38 as they had a big earnings shocker here, as they had a loss. Analysts all over it, downgrading it, and they guided lower. So I'm a little concerned about Caterpillar. When I see this, there's something going on that isn't sweet. And you could see the target in here, these blue lines right there. Those are our timing spikes. That's where the low was due, and it just absolutely hits the center of it there. You could see these other lows as these spikes point to where the important lows are. Perfect rhythmic action. Here's your failure right over here, an early decline. That's on the left side, and that's called a left-hand translation. That gives you big declines, and that's certainly what you got. We think that Fluor is going to bottom in here. What do you think about that? That it's getting sold out. Look at the huge volume in here on this big downside day. However, I don't really want to buy it. This has a lot of repairing itself to do, so I'm not in a hurry to buy Fluor at all. Let's take a look at APA. Apache moves down 11% on the week. This one, we were warning there may be a little bit more time to these gas stocks, that they were probably going to set up a better phase, but that we weren't sure if they were going to take one more hit first, and you could see that's certainly what it did as their earnings missed. I think this is coming down to a period where it's going to be making a bottom, and I think the energy stocks are going to get some bids. I like especially Exxon, as the fund managers decide to roll into some other things. So that's a look at APA, which had bad earnings, and I think it's going to bottom here pretty soon. That 618 fib extension around 42.5. Well, that's still 2.5 points lower than where it is right now. It got close to there today, and maybe it tests that one more time before it makes its low. Silver stocks on the weak side. AG, First Majestic, down 19% on the week. Didn't help that silver took a big hit here on Friday, and silver down, like I said, 55 cents in the week, so that was bad. Hecla down about 7%. I have these, I've said I thought gold and silver were going to pull back, and I have these stocks about 3 or 4 more weeks before I think they make their lows, and then I think we're setting up for a better fall and a giant last quarter in the gold and silver market. I'm going to do some big picture analysis about that down the road for my members, and talk about what I think is a good period coming after this little corrective period that I think we're in for the next month or so, while the dollar has a bounce. So that's the silver stocks. One more stock to look at in here. Cheesecake Factory. I talked about Domino's in this category, and it's playing out that the consumer out there has got problems. And when you look at the auto sales and the collapse in auto sales, and you look at the ISM this week and the breakdown in that, I just don't think the consumer's in good shape at all. And when you see this in Cheesecake Factory, you can see that, I think that this is a pretty good example. Chipotle's got its own problems, right? But look in here and look at the cyclicality in here. I mean, you got to really love it when you look at that. So remember what you're looking at. This is the ideal cycle, measuring from low to low, important low to important low. There's an important low. You can see it lining up right over there. And what that says is that, well, you probably have seen the worst of it. 67 down to $44 in practically a straight straight line in just the last 3 months. I mean, that is a really massive decline in there. As a matter of fact, the momentum indicators, take a look here. Here's where the slim ribbon and the momentum indicator turned negative right there. You can see that at $62. The stock falls all the way to 44. It stayed negative the whole time period. That was also an important break under the 89-day moving average, which is so significant. So you can see in there that was really a great sign in there. And one other thing, if you like weekly momentum, this is the Hull moving average right there. And look what happened when it rolled over. It went into this negative time frame and continued. Look where it turned positive over here, the Hull moving average right there. And look what it brought you. So just a great moving average in there. And I talk about these all the time in my Tools for Tech segment. So become a member in Tools in our video level, which is level 2. We're running a special right now for our 2-year anniversary. Send me an email to slim@askSlim.com and I'll send you a special link for level 2, 3, or 4. But level 2 is our video library, more than 250 videos. It will help you be a really much better trader and understand the markets at all levels, not just technical, but even psychological, and a lot of things about trader issues. 9 categories of videos in there that I think are fantastic. So send me a link. You can have full viewing, everything in there for 1 month for $16.50. What do you think about that? I just want to bring you in. I want you to be part of the family, and you don't, you want to leave, you can leave after that, but $16.50 for everything in our video library, just incredible. So send me an email. I'll send you the special link. So that is a look at the worst for the week. I've got a little piece right over here that I think that would be great for you to watch. We're talking, of course, about people, active traders in the market, and about the desire to become better traders, really to elevate ourselves to levels that maybe we thought were difficult to get to. I've got a great piece right in here about our special workshop, and I think this is so informative. So just watch it. It's short, and then we'll be right back with our short-term view for the coming week. I want to take just a few minutes to talk to you about our new video workshop, the 5 essential building blocks to successful trading. Well, it isn't exactly new, as I've given it a lot of times live, but I wanted to make it easier for people to benefit from our work and put it into a video series. This is not like any workshop that you've ever seen before. We don't, advertise that we're going to give you the winning system, that system that gives you the 1,000 or 2,000 or 3,000% return on the trade. This is much more different. It's about you, or really it's about me, because what I give in here is an expose of my 42-year history, talk a lot about the lessons I learned and, well, the pain or the challenges I suffered along the way to learn the lessons, so that you don't really have to do that. You can learn from what I experienced. This talks about the forces that are within me that really brought volatility in my history as a trader, and that may actually be doing the same thing for you, or many other things that may be challenges for you in trading. So in the intro, I give you all that history about me, and then I tell you what's coming in the next 5 videos, which I'm going to do right now briefly, give you a little bit of idea. Here is the 5 essential building blocks to successful trading. So in building block number 1, we talk about the underlying causes to the success-failure cycle. That cycle where you're doing really well and all of a sudden you get into a slump. There's often forces within us that bring poor decision making. I share mine, what those negative forces are, and what has really driven me to a lot of emotional swings throughout, especially the early part of my career. And I help you find that about you, what brings these repeated behaviors that bring challenges to you in trading. Building blocks number 2 is about the reactions that we have, those emotional reactions. They're often really strong. That goes really hand in hand with what we talk about in building block number 1. You know, that stress, the disappointment, that negative self-talk, the feelings of fear or shame or anger when things start to go wrong. So what we talk about and what we do in here is give some really good processing about how to build emotional fitness. That's really what number 2 is. Number 3 is, matching style, method, and personality. And what that means is that, well, we often struggle with style and knowing what, the right vehicle is for us to trade. And then, when we try to figure out what's right, we're not exactly sure how to match up those analytical tools. Also, there's sometimes mismatches in our personality and our experience in the market and our account size and our risk parameters that we designed for ourselves. So this is all about getting balance. And once you find that balance, actually that really helps with what we talk about in the previous building blocks, about the things that trigger those emotional reactions that could really get us into some trouble. Building block number 4 is about discipline. We look at 6 areas of discipline. It's not only about taking losses properly. So what we look for is getting in the right mind frame to be really focused. That helps us really stay on a plan that we build. And when we do that, we really can build greater knowledge. So the more discipline we have in all areas of our life, and that's what we really talk about, is discipline in life and in trading in this section. That really helps us to be a much better trader, much calmer, much more balanced in our life. Building block number 5 is about designing that plan, that unique plan, the basic design, understanding the win-loss ratio that we need to have to be successful, and about, reasonable expectations of returns, and how having, unreasonable expectations can really throw off our level of success. And it's about how to create that winning formula, the unique one for you. So, all of this really has got an overlay to it. It's all about keeping ourselves totally balanced and really helping us with how our emotions might get in the way of that. So that's really the overlay. It's about this being in balance and everything about our approach to trading, everything that we learn about trading, the way we engage in the markets based on who we are, and about how we can keep ourselves from getting set off by the emotional triggers. Really about being the best trader that you can be. All the things that we're going to cover in here, you might hire a coach or go into some programs and spend thousands and thousands of dollars for the type of things that we're going to talk to you about in this. This is nothing like that. I mean, a couple $100 is an unbelievable amount of money to pay for the incredible amount of knowledge that we're going to share. Every one of these videos has got a worksheet that comes with it. You'll be able to do some homework around integrating the things that we're talking about. There is really an unbelievable amount of information in here to really help you get balanced. I mean, we really wanted to keep it very affordable. And I share with you the experience that I've had in 42 years. As I said earlier, this is about you being the best trader that you can be through the lessons that I've learned in trading in the markets and through integrating many other aspects of the lessons that I've had in all this period of time. I think you'll find it amazing, especially for this incredibly low price. Go to the askSlim website, go up to workshops, click on the 5 essential building blocks to successful trading, and you will see there more of this information, and you'll be able to sign up right there for this reasonable price. I really hope that you take the time to take this great 6-video series. Thanks very much for listening. All right, short-term view for the coming week as we look at the stock market. We take an accountability of what we thought was going to happen in the last week, and then we project as to what we think is going to come in the next week. For our members, we do this on 5 major markets and look at all the momentum studies and all that, so it's really great if you take us up on the special. You'll be able to see those very involved videos on the projections for the coming week for all the markets with all that detail that we look at in there. So what we're going to look at now is this S&P 500 chart on the daily chart. Now, what we were looking for in the last week was that the market was going to roll over and move down. Now, the amount that we saw the market move to the downside was minimal compared to what we had expected. Our downside projection was for the S&P 500 to move down to 2449 or 2440. That would put it down to approximately this zone right in here that you could see right in here. That was our target zone for the week. And as you can see, it hardly even had a downtick this whole week. Now, we're looking at the 2 different size cycles in here. We'll call it the major and the minor in here, so it's pretty easy to understand. Each of these cycles essentially averages about 18 days, 19 days between the important lows. That would be right here and right here. And the smaller one is averaging around 9 or 10 days. As a matter of fact, you could see this one right in here was a 10-day cycle that this low was just a little bit off right there. Now you could see this rally in here has taken us up to day 6. So generally when you get into the final stages of the bigger pattern right in here and the smaller pattern turning down, you get a pretty good decline. In strong markets like this, declines have not been very severe, as you could see right in here. Now, we believe that the weekly pattern was rolling over and expected to see a big decline. That this period was that one of extreme risk, then you get a rally in here and then another period of extreme risk out this way. So this one hasn't brought anything yet. We still think, though, that in this next, because this is only day 6, the next 3 or 4 days has a lot of downside risk. So we are calling for a decline in the stock market in the next week. Now, the projections that we're looking at in here are around looking for 2456, like right over here, down to right over here, which is 2448, potentially getting down to this lower level right over here at the 618 at about 2439. So those are our downside targets in here. We're looking for the stock market to have a down week this week. And as we said last week, the risks are growing and we think that there's a pretty good decline. Now, whatever we get this week, we think that we'll get a bounce after that as I project out a little bit. And then this period over here in the second half of August is really what we consider to be the riskiest time period. We thought it would be a minor decline this week. Well, it was nothing. It got nowhere. We think that the coming week is where we're going to get some downside action. And then later out in August is where there is a lot of risk in there. So we'll learn some stuff, though, by how much the market can decline in this next week. And we need to get a significant change in tone, definitely, whereas these high caps that have held the market up follow the low caps, with the Russell now down over 3% from its highs. You know, we have the Dow Jones right at its highs. So a pretty good divergence there, and the transport's down like, I don't know, over 4%. I mean, they've gotten a really big hit in there. So a divergence going on here. We think it's going to bring selling in the market in the next week, and that we will then move pretty significantly to the downside. We're going to call it a down week in the coming week. We did last week also, and we were wrong. But we will do better, as we always strive to do, and we hope you loved what we brought. We want you to be really careful because it is so crazy out there. And we're always wishing you great trading.
Well, I'm going to the city.